Yo people, just want to preface this video with saying please forgive me for the audio quality on this video. I had the wrong mic input for recording, so you will hear a slight echo, but enjoy. This is my 2 Satoshis on the JS Mindset Roundtable video. Holla.
It's your boy Crypto Blood. Welcome to another episode of my 2 Satoshis. Hope you guys are doing well this morning. Get over to cryptoblood.io and pick up a couple of those Christmas holiday shirts, crypto shirts. We got the It's a Hodl Holiday and also It's a Crypto Christmas, and it for sure will be a crypto Christmas this year for us, right? I think that a lot of the run up from here has been from people talking about it at the dinner table, you know, during holidays, telling people their family members. I know I talked to a few people that friends of mine that say, yeah, you know, I talked to my cousin and he, you know, I got him into cryptos, and so people are starting. You know, it really takes some tangible witness of a certain things for a person to be really into it, like the masses at least, right? So when people start seeing, I have a business partner of mine who was able to actually buy a condominium, an apartment, like a 4-unit apartment building with his cryptocurrency. You know what I mean? So when people start seeing those types of things, it really starts to become real, because now you're realizing those profits. It's not imaginary funny money. You've actually taken that capital or those gains and actually made or created something or bought something that was physical and tangible. And so that at that point you can't say, oh, well, you know, it's just funny money, this and that. Actually turned into something that was profitable for that individual, and they will now reap the benefits of doing such a move. So you know, I think that's why we're sitting near 10,000, or I call it Jupiter, because we're way past the moon, people. That's why we're sitting where we are in Bitcoin. But let's just take a quick look at the market cap, and then also I'll update you on my Crypto Blood chart that you know, I kind of keep track of Bitcoin and see how things are going from a technical analysis standpoint. Then we'll get into what this video is really about today, which is the JS Mindset interview, if you want to call it, roundtable with Bix, Dave, Jim Sinclair, Bill Holter, and last but not least, Clif. So we'll jump into that in a second. But market cap is sitting at $310 billion, people. Bitcoin's dominance has dropped significantly. I'm assuming, you know, people are in the next few days or maybe in the next week or so, you'll start to see a movement into, or a rise, a significant rise in the altcoins. Contrary to what Trayvon James was saying, that altcoins are on a permanent downtrend. Like, man, altcoins have outperformed Bitcoin. Many of them have. You know, I don't have an index of all altcoins. That would be great to see, but altcoins and crypto assets are definitely where you want to be once you understand, get into the, if you're a newbie, I say Bitcoin, Litecoin, Ethereum. Just get your feet wet. But there is a vast, wide, big world out there beyond Bitcoin, Litecoin, and Ethereum. So I kind of digress. So we're doing pretty well here, people. More money coming in, and I can't wait till we see the futures contracts start to go live. It will really push more money into this space. For the short term, it's going to be a very positive event for cryptocurrency. So again, this chart shows I was wrong about after the consolidation where we would see a pullback. So the pullback probably has just been delayed or shifted forward, and we'll probably see a pullback here soon. I have almost $2,300 being the marker where we may begin to see some of the pressure kind of blow off, and we'll see a correction at that point. How big? Maybe 20%. You know, that's just gut feeling, because even from like here to 10,000 down to 7,900, roughly that area, that's, you know, that's 30%. Well, actually, I'm sorry, not 30, but 21%, somewhere around there from current pricing or prices. So that's not a big pullback in Bitcoin terms, you know. So I think that's where we are, or where we will be. We'll take a breather here after this 10,000 mark. That's a huge, what we call in trading, psychological number, 10K. And Jupiter is a big planet, and it takes up a lot of gravitational pull. So we ain't gonna just be able to fly past Jupiter like that, people. So today I wanted to go over my thoughts and comments on the JS Mineset interview or roundtable with Jim Sinclair. We had Bill Halter, we had Bix Weir, we had Clif and a guy named Dave, which was a different Dave than what people thought, you know, thought the Dave would be. But I don't even know that guy's last name. Bill Halter said something about he's in witness protection program. I don't know if he was being, you know, just being sarcastic or what, but out of the 4 or 5 of them, Dave, in my opinion, brought the least to the table, and his concepts of Bitcoin and stuff were the most off basis, in my opinion. But that's cool. I mean, you know, hopefully he is continuing to educate himself in the crypto space, what Bitcoin is, how it's not private but anonymous, and so on and so forth. So, you know, he's better off than many of these people that are in the precious metals industry or field, who just want to spread negative and really falsehoods about cryptocurrencies. He's in a better place than they are, I believe. At least he's trying to learn and not stay ignorant to the facts. So first off, my overall thoughts about the roundtable. Thought it was great. I really did. I thought it was great. No one really disrespected anyone. You know, at the beginning, I think Jim wanted to kind of know what, in essence, what Bitcoin was. Bix tried to explain it. Don't think he did that well of a job explaining what Bitcoin was. He kind of went into more so how he got into Bitcoin, or, you know, his, like, that route of it. And then we had Clif kind of follow up behind him, and he did a better job at explaining to Jim Sinclair what Bitcoin is. What I was very surprised at, though, was the fact that, and I'm glad, that Bill and Jim definitely see that cryptocurrencies are here to stay. Or I should talk more so on Bitcoin. Bitcoin is here to stay. I thought that was great to see, especially coming from like a legendary type of guy like Jim Sinclair. So that was good. But one point that I want to really pull out from, or there are a couple, but one right now I want to talk about, is the fact that gold and silver are just as bad at being money as fiat is. And I think Clif stated that. And that's very true. Like, that's what I think a lot of precious metals people fail to realize. In this dispensation, in this world we live in now, gold and silver, well, not even in this dispensation, period. It runs into the same issues that fiat currency ended up, ends up running into, that same cycle, right? Why every 40, 50 years we have a new fiat currency. Well, if gold was definitely the route to go for a currency, then we still would have currency being spread around in the form of gold today. The reason why we haven't is because it's not that great at being a currency. The portability of gold or any precious metal is, in today's economy, simply isn't practical. I can't say I want to buy, a car or a house. Let's say a house, right? Some type of property for $500,000. Well, and let's say it's in another state. I won't even do a different country. Let's say it's just another state, 500-600 miles away. In order to settle that deal, that physical, bar of gold would have to be transported to that individual. Hopefully it doesn't get, no one robs the Brinks truck or whatever on the way to the person I'm buying the property from. Once it gets there, they have to assay it and make sure it's real. You get where I'm going with this. This will take weeks, or at least a week or so, to have that completed, versus you can even take fiat. In fiat, that can be done in a day or two. And in cryptocurrencies, that can be done in 20 minutes, depending on what cryptocurrency you're using. If you're using something like Litecoin, that can be settled in literally 5 to 10 minutes. So gold is a store of wealth for sure, but it is not a currency. It's not a good currency, I should say. So I agree with Clif on that. I think there will always be, and I kind of touched on this in my interview with Clif. I think that there will always be some type of fiat currency, and there has to be, just to be that medium of it, the ability to exchange between other forms of wealth, gold, cryptocurrencies, crypto assets, or whatnot. So that fiat currency may not always be how we think of it. Like, I think at some point the governments will start to issue their own fiat cryptocurrency, and that will be, kind of the basis as with what Jim Willie talks about. You may have the Scheisse dollar. He believes that in the United States we'll end up having two separate currencies, one being used domestically and then one still being used internationally for settlements. So I can see a scenario like that where the second currency is a cryptocurrency that's created, and that is now the forms or means of use internally within the states. Domestically, we start to use this cryptocurrency, which is I don't know what they want to call it. But what the governments fail to realize is the whole point of cryptocurrencies is not to be on a blockchain, but to be decentralized, and no one person controlling the flow of that or issuance of that cryptocurrency. It's all programmed within the protocol, so no one person can manipulate over the long run. I do not, and here's one thing that Bill Holter talked about. It was toward the end of the video. He talked about like Bitcoin not being a currency, even though we can call it that. I agree with him actually. I don't, you know, I know I'll probably have pushback from people regarding this, but I do not think of Bitcoin as a currency. There are very few cryptocurrencies that I consider a currency, even though we kind of coined it that. I really don't think Bitcoin is a currency, and here's why. It's too precious. It's too rare. I believe cryptocurrencies, or not cryptocurrencies, but currencies should have some form of inflation, just to keep what we call money velocity going. Like, I don't see like Bitcoin being a currency. It would never work as, like, let's say we adopted Bitcoin as the currency of the United States, the official currency of the United States, or any country really. People would never want to spend it. I have we sell merchandise on cryptoblood.io, and I only accept digital currencies or cryptocurrencies. I accept Ethereum, Litecoin, and Bitcoin. I plan to add more later, but there is even, we can see when people abandon their carts, and I would venture to say many of them abandon because they realize that they have to use cryptocurrencies to purchase their shirts. This is the problem we'll see going forward, is the reluctancy to use those precious coins, even though you could theoretically, and this is what many people do, they'll purchase shirts or whatever, merchandise online, whether it be from me or from other online businesses that accept Bitcoin and other cryptos. They'll purchase with the cryptos and immediately go back and replace it with fiat. So replace the amount of crypto they just sent or spent with new crypto using fiat. So that still is a barrier to me that will not allow currency to have that velocity. A good currency, a good economy, and when I say a good economy with X fiat money, that fiat money should have a nice money velocity, meaning it circulates through the economy pretty well. The less velocity we have, it's bad. It's not indicative of a good currency. I don't think people will spend Bitcoin readily on a regular basis for a cup of coffee, for food, for shopping and stuff like that. Like, I don't ever see that happening. Even if Bitcoin starts to skyrocket, it's a $1 million token, people will use it and they'll have to use less of it, but still I don't know if that will ever be a great conduit or a medium of exchange for goods and services. But I think eventually we will see some type of cryptocurrency that is truly modeled after what we know as fiat currencies today. Maybe have a unlimited supply, but that supply is chokehold or bottlenecked to create X amount a year perpetually. That will be something that I think will be closer to, if we want to see some type of cryptocurrency used as a currency for a country, we'll have to see it with the parameters like that, where again, X amount of coins created every year in perpetuity. So there's an unlimited supply, but it's kind of restricted on a year-to-year basis to create some level of scarcity enough, but not enough to have it be a deflationary currency where people don't want to use it. because they know that tomorrow they'll be able to buy that service or good at a cheaper price because their currency, their cryptocurrency, will be worth more. And that's what we have with Bitcoin and a lot of these cryptocurrencies. So I know that was a long-winded kind of one on that point, but definitely is something that you guys should think about, and I want to know your thoughts about that. Like, do you really see Bitcoin as a currency, or do you see it as more of a commodity, or you can call it crypto-modity, something like that? Do you see it more as an asset than a currency? I am glad again to see that Jim and Bill were open to the crypto idea now, and they see that it's not going anywhere. Jim was kind of stuck on valuation. He really wants to pin down the valuation of Bitcoin, and to me it's almost impossible to do so. I remember back when I got into cryptocurrencies in late 2012. Back then, you had voices like Trace Mayer, I should say, would be, all around the internet talking about Bitcoin, spreading the gospel, if you want to call it that. And he was back then seeing $1 million a token is easily conceivable. And even back then I said, yeah, I can see that for sure, absolutely. As these unlimited fiat currencies printed to, basically it's an unlimited supply of fiat currencies chasing to get to a Bitcoin that there are only 21 million. That will for sure create a situation where the price of Bitcoin will be hyperinflationary, the price. So yeah, I can see 1 million. I can see even more than that. But the timing of that is very hard to pinpoint. Very hard to pinpoint. So valuation is really hard to, I think Trace tried to model his valuation off of, this was a few years ago, I remember him talking about using new models to create valuation for Bitcoin, and using cost of mining per block, cost of, basically the whole cost of mining a Bitcoin, the time and all that. He had like a computation or a equation that his team and Trace came up with that gave a valuation to Bitcoin. Not sure if that's public, but I do remember him doing something. So you would have to kind of go, it's a new paradigm. So valuation on Bitcoin cannot be done the same way you would place valuation on any other asset or stock and stuff like that. So I think, that's something that we can't answer as far as what the valuation of Bitcoin really is. Speaking of value of Bitcoin, I saw or I heard Dave, the gentleman Dave, make a common kind of newbie mistake about Bitcoin. And that is, and I get this still today from people who want to know about Bitcoin, are enamored by the price of Bitcoin. And they shouldn't really be. And so they think that most people, this is a misconception, most people still today think, like newbies, think that they have to buy one whole Bitcoin. Because we know, like, $1 is $1. You can go down to a penny, but a dollar is a dollar, or $100 bill is $100 bill. The denomination of it, that's the old paradigm. That's the old thinking of money. So with Bitcoin, it's 8 decimal places. So you can break a Bitcoin down currently as of today. You can divide a Bitcoin down to sub penny levels. So below a penny, Okay, so you don't have to buy a whole Bitcoin at $10,000 today. You can buy a fraction, an eighth of a Bitcoin, a 16th of a Bitcoin. Like, you can get very low. At today, you can go as low as the cost to buy it from a lot of these exchanges like Coinbase, Kraken, and so that's probably the lowest you can go now. But once you're in the system, you can send people less than a penny of a Bitcoin. And many of these tokens are even, you can be divisible even lower than that, 18 decimal places. So that's something that Dave mentioned, and I could tell that he's still trying to learn or pick up the concepts of Bitcoin, and that's one that many newbies still have to get over. So when you're talking to someone about Bitcoin, just make sure you first let them know, hey, you don't have to buy a whole Bitcoin. You can buy $100 worth, or $50 worth, $20 worth. You don't have to buy a whole Bitcoin. In the future, and this was something that was talked about by Andreas Antonopoulos many years ago, in the future, we will probably not use the base one Bitcoin. It will be, or BTC, it will be MBTC, microbit. So we'll move a decimal place over. And in the future, we may have to go to nanobits, where we're moving like 2 decimal places over to represent 1 nanobit or 1 microbit. That's what we'll do to keep the, let's say Bitcoin is at $1 million in the future here. Well, things won't be priced at 1 Bitcoin. It'll be priced in 1 micro Bitcoin or 1 nano Bitcoin, to keep things kind of from a decimal standpoint in place. So keep that in mind, people, as well. Dave also talked about not thinking that Bitcoin he had an issue with Bitcoin and people being able to see all of your transactions. And Clif tried to explain it. I don't know if the guy ever got it, but yeah, you don't have to. Yes, people can see every transaction from a particular wallet, but there's no name to that wallet unless you allow you allow people to know that you're the owner of that wallet. And even in that case, you can always have, like with the exchanges, when funds come in, they get scrambled, mixed together, and then placed into a different wallet address. You literally can create a new wallet address for every transaction you do, not just every product. I know they gave a scenario, Bix gave a scenario of products you can create in the scenario of having a retail brick and mortar store or an online store or whatnot. You can create a new wallet for each product. That's true, but you can create a new wallet for each transaction. That is a way to keep things more anonymous, and the protocol will grow, and upgrades to the protocol will allow for more anonymous transactions. So we'll see that coming in the future as well. So no, Bitcoin is not in itself private, but it is anonymous. So if you're careful about how you conduct transactions on blockchain, you can be private as well. What else we got here, people? Bix talked about Bitcoin derivatives won't be settled in Bitcoin, and that's true. But I think I think he said that in a way where he was believing that that's a good thing. I actually think that's a bad thing, because that means they can manipulate their price of Bitcoin without responsibility, basically. So they never have to deliver on the actual Bitcoin at the end of a contract. They only deliver back into fiat cash, which they have unlimited amounts of. So I think there would be more responsibility placed on these like COMEX, not COMEX, but CME and CBOE, if they did have to settle or offer a settlement in Bitcoin. So I disagree that gold will become like Bitcoin in pricing. I think Jim Sinclair was talking about this. He believes that at some point Bitcoin or gold will become like Bitcoin in pricing because the physical amount will overrun the contracts, the number of contracts available. I don't agree with that. Honestly, to be honest with you, in this day and age, I don't see Bitcoin or I don't see gold ever getting close to Bitcoin pricing, ever. Think of gold. There needs to be a shift in your mindset, in my opinion, about gold, about precious metals. Think of it as just somewhere to park your money, to have it independent or outside of the fiat system. I don't think you're going to see huge returns in gold, silver, so on and so forth. They will appreciate in price, but that's only by the nature of what they're being priced in, which is fiat currency. Fiat currencies are all on a race to the bottom. They're all losing value. That's why when you price other things in those currencies, those fiat currencies, those other things, those products, services, and goods, the prices of those are always going up. It's because it takes more dollars to purchase that said thing. So I don't see it though being to the point where you will benefit greatly from gold, silver, and all these other things appreciating in price. Because if gold gets to 10,000, 20,000 an ounce, what is $20,000 worth? What is the buying power of $20,000 at that point? In my opinion, it won't be much more than what it is today. You know, what you can buy, let's say with $5,000, by the time gold gets to $20,000 in the future, it will have the same purchasing power as nominal dollars today at $5,000. So really the question you shouldn't focus so much on the price of gold, because you're pricing it against a fiat currency that is always losing value, and it really isn't a true reflection of the value of gold. But again, I say all that to say, I don't think that gold will ever, and I know it's going to be tough for people to come to this realization, I don't see gold ever being that thing that will really make you really wealthy. It will preserve some of your wealth, just like you can take any other type of asset, like a home, diamonds. I mean, I don't think diamonds are a great investment, but what are some other things? I don't know. You know, it's not going to be that thing that really makes that benefits in this great wealth transfer that we're seeing. And the wealth transfer will be from fiat currencies to cryptocurrencies. It just is what it is, you know. So a lot of you precious metal folks better get on the bandwagon and get on it soon, people. I'm telling you. One other thing that was talked about was that he said, and this is from Bill Holter, and I was very surprised. He says that we haven't seen a real market in cryptos because it doesn't have derivatives yet. And I agree with Bix on this point, is that we actually have seen, this is a real market where we don't have derivatives to truly manipulate the pricing of these cryptocurrencies. Now, will that change in the future? Yes, I believe it will. In the long term, I think we'll have less of a real market in cryptos, or at least Bitcoin, or whatever whichever cryptocurrencies the CME, Wall Street cabal decide to financialize. So once they start doing the financialization of Bitcoin and any other ones they pick, then that's when the real markets will stop. Currently, we have great real markets, and that's indicative of the price swings we see, the exponential growth. You don't have limit ups and limit downs. You know, that type of stuff is where the fake market, that's not real markets. Those aren't real markets. When you have derivative markets that have limit ups and limit downs. And what I mean by that, guys who don't know, limit up or limit down is a way for, it's a circuit breaker that the CME and a lot of these options exchanges and stuff, futures options, use to break. Like if you have a spike in something, it'll limit up. There's a limit on all of those, so trading will stop past that limit. There's a window above spot or above price, there's a limit up, and then below there's a limit down where trading will halt if that price gets to that place. You don't have that in Bitcoin, in cryptocurrency. But again, I think with CME coming in, CBOE coming in, you're going to start seeing that, and that's when the manipulation and the realness of crypto or Bitcoin pricing will start to fade, in my opinion. It's basically the opposite of what Bill Holter and Bix even said this as well. Like, no, that's because we don't have derivative markets is why we have a real market in these crypto currencies and assets right now. One thing I'm still trying to understand what Bix has with this Alan Greenspan being the creator of all digital currency and possibly being behind Bitcoin. Like, I don't know where he's getting this stuff from. That's something I don't agree with him. I heard him talk about that in the round table. I don't know where he's getting these claims from. They sound a little baseless because there's never any real evidence that he puts on the table about this. Just like all the gold that's in the Grand Canyon thing. Like, I don't know where he's getting this stuff from. So I didn't necessarily agree with him on that one. I didn't also agree. There was one point in the interview that I did not agree with Clif on, and that was the scenario where they were talking about $1 billion or 1 million Bitcoins being in the Satoshi Nakamoto address. And that's true. There is that amount in the Satoshi Nakamoto address. But Clif said that if there's a sell, if those coins were to hit the market and start to sell off, we will see an increase in price. I don't think we'll see an increase in price. We definitely will have a smackdown, a hard smackdown in the price of Bitcoin. But that doesn't change the fact that Bitcoin is powerful. Like, the price should not be what people are excited about. And that's when I got into Bitcoin, that was not what I was excited about. I was excited about the fact that we solved a programming issue that we could not solve in the past. And that is trustless transactions without neither party knowing each other, right? And so it would definitely be a price crash in Bitcoin. And like Clif said, you haven't been in Bitcoin until you've experienced a crash or two. I've experienced 3 or 4 of them. I'm talking like when Mt. Gox happened, Bitcoin went from on Mt. Gox price was 1,200, 1,100, something like that. It went from 1,100 down to sub $100. It went to like, I think like $80 or $90. That's a 90% correction. Now that's a crash. But we believe, you know, the people who were in cryptos at that time that didn't leave believed in the concept, not so much the price. It was the concept. So even if, you know, Satoshi did sell 1 million, came out one day and said, I want to just smack the price of Bitcoin down, it will totally decimate the price of Bitcoin, but not for long, because people will understand that it wasn't hacked. There was no, you know, nothing was compromised from the standpoint of consensus and blockchain. And they will quickly realize how cheap the coin is, and it would make a huge, man, we will see a rally like none other after that dump of Bitcoin. That new supply of 1 million Bitcoin hits the market. So it really doesn't matter. Like, that's not what it's about. People confuse it. It's more about blockchain, the ability to have a consensus without trust, you know, the triple ledger-ness of Bitcoin and all of the altcoins and such. So that's where the value really is not in the speculation of Bitcoin. It's more so in the being able to transfer, you know, so much money, does countless amounts of money between two people with very little friction, you know. So that's where the power is, that's where the value is, and that's why Bitcoin, all things equal, will continue to just go sky high in pricing, because people understand that. So that's pretty much my take on it. I know it was long-winded there, but it was a 2-hour video. I'll link it in the description of this video so you guys can watch it if you haven't. I'm sure most of you have. Give me your thoughts on the video, the roundtable with Clif, Bix Weir, Jim Sinclair, and Bill Holter, and Dave. Don't know who Dave is, but I would love to know your thoughts about that, people. Make sure you like and subscribe, and that's pretty much it for today, peeps. I'll talk to you guys tomorrow. Holla.